Haynes, welcome. So the January update, we're deliberately doing in early February, so we'd wait for the Reserve Bank to meet. But how's the year started?
Oh, with a bang, hasn't it?
Yeah,
There's a lot going on. I can't believe we're in February already. Yeah, so much happening all over the place, all over the
yeah,
country.
yeah, yes. And in the last, what are we saying? In the last 20 minutes or so, the Reserve Bank has
Yes.
passed on their decision to increase rates, which wasn't
Yeah,
unexpected, but is of course, going to be
bit of a
disappointing for anyone who's got a mortgage.
yes, a bit of a Debbie Downer, that one.
Yeah, yes,
Yeah,
yes, yes, yes. So I guess one of the reasons we've been seeing it coming is the employment data was more positive than what was expected. So more people in work, that is a good thing,
that
um,
is a good thing.
which, can mean more money in the economy. And then the Reserve Bank gets, a bit nervous about the inflationary pressures. But then that
Yep.
also means that inflation also, well, not necessarily means, but inflation did go up more than what was expected as well. So by the time those two bits of economic data came out in the last couple of weeks, it seemed fairly likely there would be a rate rise. So, which means borrowing capacity does drop a little bit, but it's only one rate increase, I think the first in 2 years. So it won't drop that much, but it might knock consumer sentiment around a little bit. But I guess we always say, when you're buying a home, you're generally taking a 30-year mortgage, and there's always going to be ups and downs.
Yeah, exactly. And because we're recording this like 20 minutes after it's happened, we don't know yet how many banks are going to pass it on or not pass it on. We're not sure, but I guess what we have been seeing over the last couple of months is the fixed rate movement that the banks have been passing through. I don't think we've talked about fixed rates much in the past just because, rates are reducing, so it hasn't sort of been a request, I guess.
Yeah, yeah, yeah. For the last 2 or 3 months now, I guess. Yeah, so we've
Yeah.
seen more people want to fix their rates, and I think after today that there's going to be more of it. So one of the things that if I just go back a step, so during the pandemic, which is what 5 odd years ago now, I guess a lot of people were fixing then, but that was fixing at a time when the rates were about 2%. And but aside from that, fixing is not always as common. But anyway, it is a bit more common at the moment. So one of the things we're seeing at the moment is people locking in their fixed rates. So when there's a real chance they're going to go up again, then if someone wanted to fix today, they generally would prefer to lock in the rate that was fixed today. But by the time, if it's a purchase that the settlement happens in 60 days time, maybe the rate's gone up one or two more times. That's possible. So we're
Yeah.
seeing more people lock in their rate. The banks will typically charge, of course. So they might charge $750 or they might charge 0.15% to lock it in, which that money goes to the bank. Saying that, there are a couple of lenders that automatically lock it in without a fee, but of course, that may not be the right lender in that particular situation. So,
Yeah.
but rate locking, when we're talking to people about fixing at the moment, we always mention everyone should consider at least locking it in, and whether they choose to, it's up to them.
Definitely seeing a little bit more of that in my conversations over the last couple of weeks too.
And that often means
Yeah,
a split loan, doesn't it? Part
it
fixed and
does.
variable.
Yeah, yeah,
Yeah.
part fixed, part variable. So customers that I had yesterday didn't know that you could split it.
And having that offset, all the benefits of the offset, and
Yeah, on the variable portion,
yeah, so
but
the
the
offset,
certainty of repayments on the fixed portion.
and for everyone listening, so the offset account, typically with virtually every bank, the offset account can only be linked to the variable rate loan. So that's a
Yes.
key reason why many people would like to do a split loan so
Yeah.
that they can still offset the variable loan.
I guess I'd like to talk a little bit about the government help to buy scheme
Oh,
because we are helping so many first home buyers with this scheme. It's been so rewarding to help people get into their homes.
yeah, so there's been the 5% scheme that we've mentioned before that's been around for a while, which has helped a lot of people. But this new Help to Buy scheme only came out, I think it was the 1st of December. I think that's right. So it was only a couple of months ago that it got launched. And the demand has been much stronger than what we expected. There are only two banks who are on that scheme. So it may not be a huge amount of choice on the scheme, but what we're finding is, as long as our clients can meet the criteria, it means the government owns part of the property, which is that ideal? I say it's not ideal generally, But what it does do in some situations where for people who really need a home, but we can't get the borrowing capacity that they would like to get the purchase price that they need, this still helps them buy a home. And down the track, they can buy out the government's portion, subject to income, etc. But we're finding a lot of people who this helps them get the home that they need, whether it's single parents, doesn't have to be single parents, but we're certainly seeing a lot in that demographic, I guess. So, single parents who otherwise are not getting that purchase price that they need.
For people who live in an area where the cost of housing or costs of property are very high, they're never going to get into the market because of their borrowing capacity. This has enabled them to purchase a house of their own because they can afford the higher purchase price because the government will own a portion of it. So I think it's up to 30% that the government will own. But add that on top of what you could normally borrow, that could be hundreds of thousands of dollars on the purchase price that will actually get you into the market because you can't buy anything for what you can actually afford. So it's been really beneficial and so rewarding.
Really. Just very conscious of the property prices increasing around the nation. So especially in not major cities, I guess. So if you look at Perth and Brisbane, and not that Brisbane's not a very big city, but I'm talking outside of Sydney and Melbourne. So if you look at in the last month, again, what's happened in Perth and Brisbane, and median prices around the capitals largely over $1 million now. I mean, Melbourne's not, but many cities now are. So that market for that scheme where the prices have gone up and people are struggling to afford what the sort of place they need, that's actually right around a lot of the capital cities now. The government scheme is helping, and the demand's been stronger than we expected.
Yeah, absolutely. Well, let's be quick because there was one other area that I wanted to mention because it's now becoming more common in our conversations with our customers is climate.
Yeah.
And how it's impacting properties and lender requirements, etc.
We get this query a bit more through the summer months, but people are in areas where they're more likely to cyclones, and obviously there are still bushfires happening as we speak. But we do get more queries, and I know when people use there's a service that when we've got investors using this AI product to buy properties around the country, and one of the things that's looked at by the firm who does that data collection is, can the property be insured? Because the insurance companies are all over, in terms of climate change and what's happening. Insurance companies don't want to lose money. So if they're seeing a lot of undue risk in an area, then, they may not offer insurance, right? So yes, we do get a few more of those queries. So, and I know from personally when buying properties in the last few years, I've always just wanted to check out, how close is it to a river? How close is it to the sea? Saying that I live very close to the sea, but in terms of, spreading your risk, then climate, I think it's only going to become a bigger part of people's decision making.
And I guess the other thing to mention is if an insurance company won't insure the property, that means that a bank will not accept that property either.
Yes,
because the bank's requirement under a mortgage is that the property is to be insured.
Yeah, that's true.
Yeah, it does have ramifications with your ability to borrow. Okay, we have chatted a bit more than what we would normally, so I hope everyone enjoyed it and didn't get bored with us. So we'll leave it with that.
That's right. Until the end of the month, and anyone wants to chat, let's talk. Okay. Till then, thank you. Bye.
Bye, guys.